Hey everyone, if you've glanced at the news lately, you know the global headlines are, well, incredibly confusing. It feels like there's a new crisis every single day. But to really understand what's happening on the world stage, we don't need to start with massive international summits. We just need to look right in your own wallet. Because right now, the world economy is being fundamentally reshaped by multiple major forces, and they are hitting us all at the exact same time. Today on The Explainer, we're connecting the dots across 5 main pillars: the cost of living crisis, the drivers of global strain, the rise of digital finance, AI on the workforce, and finally, the new economic era. Let's dive right in. Okay, Section 1, the cost of living crisis, the symptoms we all feel.
Right now, across the US, the UK, and beyond, the macro economy is literally sitting at your kitchen table. We aren't just seeing subtle shifts here. We're talking about aggressive price hikes on the stuff you buy every single day. Milk, bread, eggs, housing, your energy bills, fuel. It's all going up. And it's forcing middle and lower income households into a real corner, actively shrinking their spending power. But this pain at the local grocery store, it's really just a micro-level symptom of a much, much larger shift. Which brings us to Section 2, drivers of global strain, the macro causes. See, we are caught in this relentless chain reaction. It's like a giant domino effect. Step 1, a geopolitical flare-up happens in the Middle East and global fuel prices spike. Step 2, almost instantly, transportation costs go up. Step 3, global shipping logistics become incredibly expensive. And Step 4, they pass that cost directly to us, the consumers. So that tension on the other side of the planet is exactly what's making the milk and bread we just talked about so expensive. But fuel is just one piece of the puzzle here. We're actually getting hit by overlapping disruptors. On one hand, we've got pandemic disruptions. We're still feeling the hangover of slowed factories, unstable supply chains, and high government spending. And on the other hand, those are colliding head-on with modern geopolitical conflicts. Whether it's the Russia-Ukraine conflict disrupting global grain and energy, or Middle East tensions threatening shipping routes, our global supply chains are so deeply connected that a localized disruption instantly triggers a worldwide shockwave. And this puts governments in an incredibly tough spot. It's what we call the central bank dilemma. It's a massive balancing act. If they leave high inflation alone, families continue to face a daily financial struggle just to survive. But if they fight it with aggressive interest rates, well then loans become expensive, mortgages go up, and hiring slows down, which risks freezing economic growth entirely. They are walking a razor-thin tightrope right now. Now let's pivot to Section 3, the rise of digital finance, the crypto wildcard. While all this traditional economic strain is happening, we're seeing a massive technological disruption in money itself. Cryptocurrency is absolutely no longer just some niche internet experiment. Over the last decade, digital assets like Bitcoin have matured into globally recognized financial markets. They're drawing in millions of everyday retail participants and massive institutional investment firms alike. And facilitating this whole shift are global platforms like Binance. These platforms allow users to buy, sell, and trade digital assets internationally, totally outside the purview of traditional banking. They've really become the primary gateway for a whole new generation of investors who are actively looking for alternatives to legacy finance. But as you might guess, this creates a deeply polarized landscape. If we look at the opportunities, advocates see immense innovation and a way to escape traditional banking. But on the flip side, looking at the risks, regulators see a completely different picture. They're warning about extreme price volatility, rampant fraud, and unpredictable international regulation. So right now, governments are locked in this fierce debate over how to regulate this new ecosystem without accidentally killing the underlying innovation. Moving on to our second major disruptor in Section 4, AI and the workforce, the technological shift. It's literally the defining question of the decade, isn't it? Will artificial intelligence replace your job? This question is echoing through corporate boardrooms from the US all the way to Asia. But the reality of this disruption is actually highly nuanced. AI isn't just a software upgrade, it's a total structural reset. On the efficiency side, yes, it offers unprecedented benefits: rapid automation, incredibly fast data analysis, and lower operational costs. But it also forces dramatic workforce changes. While some traditional roles definitely will be automated, experts argue we're actually looking at a massive job evolution rather than total elimination. We're seeing major sector disruption alongside entirely new business sectors being built, fueled by massive startup investments. And because this tech is such a game changer, the international arms race is incredibly fierce right now. The United States and China are currently locked in a race for AI development leadership. This goes way beyond simple chatbots. The winner of this technological race will likely secure a massive advantage in global productivity and economic leadership for decades to come. But with that kind of power comes a real crisis of public trust. Suddenly, we are wrestling with some serious challenges: widespread misinformation, sophisticated digital manipulation, major privacy concerns, and massive cybersecurity threats. Just like with crypto, governments are basically trying to build the airplane while they fly it. They're scrambling to draft ethical regulations to protect people without aggressively slowing down their own tech sectors. All right, let's bring it all together in Section 5, the new economic era, connecting the dots. The biggest takeaway here is that absolutely none of these forces exist in a vacuum. We're entering a long, grueling transition period. Think about it. Traditional industries are changing. Digital finance is rapidly expanding. AI is accelerating at breakneck speed, and geopolitical tensions are persistently squeezing the supply chain. And all of this is happening at exactly the same time. For businesses and everyday consumers alike, uncertainty is pretty much the new baseline. As one perspective perfectly sums it up, the next decade may not simply be an extension of the old global economy. It could become the beginning of an entirely new economic era. We aren't just waiting for things to go back to normal anymore. The policies and technologies being developed right now are actively building a completely new normal. Which leaves us with one final, absolutely crucial question to think about. Are we ready for the new economic era? The global economy is literally rewriting its own rules in real time. So the question isn't just whether your wallet can survive the current inflation. It's whether your skills, your understanding, and your investments are prepared for the world that's coming next. Thank you so much for joining me on this explainer. Keep learning, stay adaptable, and I'll catch you next time.